So this is SoFi on the daily chart, and as you can see, price has for the most part been range bound for roughly 6 weeks. Now, one important note that I want to mention: we have earnings next Monday, and that should be a price mover. Now, scrolling out to the weekly chart, within this small range, price action remains in this bigger range going back to January of last year. And typically when prices are range bound, you want to play the extremes. That's where you have imbalances between the buyers and sellers. In this case, at $6.50, you have the buyers overwhelming the sellers, which is why we saw price jump from $6.55 in November to a high of $10.29. And then on the top side, this band, which represents resistance, is where the sellers overwhelm the buyers. And we saw on several occasions how price came up to that level, pulled back, came back to that level, and dropped to $6.50. Came back to that level again in December, and now is trading near that $7 level. Now, to put that all into perspective, we go out to the monthly chart, and we had this beautiful drop base rally, and when price came back, that was a great opportunity to get long. Drilling back down to the daily chart, we can see a bearish crossover. That's where the 50-day, which is in red, crosses over and below the 200-day moving average in yellow. However, one analyst thinks that the stock can move up roughly 42%. So in December of 2021, Citigroup initiated coverage on SoFi, and an analyst by the name of Ashwin predicted SoFi's differentiated combination of consumer and enterprise services and member-centric approach would lead to rapid member growth and engagement, and it did. From 2021 through 2023, SoFi more than doubled its revenue and broke a 7-quarter-long losing streak, reporting its first ever profitable quarter in Q4 of last year. Now, Ashwin has recommended buying SoFi stock pretty much ever since. About 2 weeks ago, he resumed coverage, calling the stock another buy, and he's so as optimistic as ever about SoFi, predicting the shares will hit $11 within a year. Now, Ashwin's latest thesis is SoFi's decision to float $750 million convertible debt, paying 1.25% interest, and use it to repurchase $600 million in stock, paying 12.5% preferred dividend. So this is just financial engineering. Now, looking out a few years and counting the effect of the interest dividend savings, most analysts agree SoFi will report its first full year profits this year of 8 cents per share, and could triple that number next year, then double it again in 2026. So at $7.75 per share today, this implies a 2026 P/E ratio of just 15.4% on SoFi stock. So stock growing as fast as SoFi, this seems a very fair price to pay from an evaluation standpoint. Now, I'm looking at this setup as a bear trap. What do I mean by that? So you're going to have the support and resistance traders. If they see price break down and close, they're going to short it, only to be met with buyers. And what has happened in the past? Buyers bid up the price roughly $5. So again, expect the price to be range bound for another week or two, but next week we should start seeing the fireworks. Thanks for watching. Subscribe. Please like the video.